Welcome all of you here. This is our first Brick Talks, a knowledge session, a knowledge series which the IBG is hosting. IBG has just launched a real estate vertical. So this is the first session we are having, and we are indeed very happy, privileged to have such a illustrious and a very distinguished panel. So with welcome Sanjay, Dutt, Anuj, Puri, Samir, and we thank you for being the panelists. I would now request Vikas ji, the president and the founder of IBG, to say a few words. Is he there?
Sangeet, Saumyajit is also joined.
Okay, fantastic.
Perfect.
Hello, good morning, everybody. This is Saumyajit here. Hi, Sanjay. Hi, Anuj.
Hi, Samir. How are
see you.
you?
Hi, Saumyajit.
So nice to see all of you.
Pleasure, pleasure. Thank you for joining, sir.
Thank you, Sunil.
Vikas ji, few words.
Thank you. Yes. Yeah, you know, he has said twice. Good morning to all. He twice said that you say a few words. He did you notice he repeated that? In any case, I'm a man of few words, more of action. So, Sangeet, I have to tell you that you really put together an exalted panel, really powerful band here.
Thank you, sir.
And I know very little about real estate, very little. So I'm all ears today to listen and learn. In a few words, as he said, real estate activity seems to have picked up to a layman like me. I'm getting a lot of calls offering flats. Would you like to buy do you want to move into larger premises? Do you want to move into the Juhu beach? And so forth. So, but I'm happy where I am. So thanks a lot. So despite COVID and subsequent lesser commercial activity, not real estate, commercial activities, business, the real estate prices are maintained. And I really wonder why this is not impacted. Real estate, as I'm not asking answers just now, I'm just making a few observations. Real estate seems to be going up like the stock market, which also should have collapsed, but it's not. So this is something I'll be looking for answers. Whereas commercial spaces seem to be going down, the activity for buying commercial is at a low ebb, in my opinion. I think the reason is that we are now getting into a hybrid situation of work from home and work from office. Offices have begun, but like my office, it's only 10% yet. In fact, my staff are saying that, why do you want us to come at all? We're working equally well, if not better, from home. So, this is something that the commercial space people will have to deal with once it really opens up. And I think I'd rather cut it short now. You did say a few words. So let's go over to the panel.
I didn't mean that.
Panel. No, don't worry. I'm just joking. Let's go over to the panel. I really want to hear this panel.
Okay.
Thank you, Meenal. Thank you, everybody.
Thanks, Vikas ji.
Thank you.
I would now invite my partner, Meenal Sinha, who is an executive committee member, to say a few, to present the IBG real estate vertical and formally introduce our distinguished panel. All yours, Meenal.
Thank you so much, Sangeet. And I would just like to welcome everybody here again. And of course, our amazing panelists. Thank you so much for being here. Siddhi, can you please share your screen and take us through the presentation so that
Yes.
I can talk about it? So we are doing this under the IBG real estate vertical banner, and we are naming our talks as the IBG real estate brick talks. I think that's an amazing name. And I think, like Sangeet was saying, we have a fully power-packed panel to begin with. We will just introduce you briefly to what we do at the IBG real estate vertical. Siddhi? So IBG, we all know, is a modern nonprofit chamber of commerce, and we focus a lot on mentoring and supporting all the members, along with organizing lots of meetings with other chambers, whether they are national or international, other states, and also consulate meetings and getting international delegations. Siddhi? Next slide. And we have already heard from our founder president, Mr. Vikash Mittasen, who's also the CMD of Nazara Technologies and the Honorary Consul General of Republic of Mali. Why IBG is very different, I say, from other chambers is because we have Vikash actually taking interest in every activity and driving it. And of course, with the able team of Priya, Sujata, Girish, and Siddhi. Next slide, Siddhi.
Taking interest also means meddling. That's what my staff tell me.
Yes. He is, as it is in the ecosystem, he is one of the most coveted members, and IBG, all the members have that advantage of picking up the phone and just talking to him. Of course, we try and fix meetings and we respect his time, but we can actually just WhatsApp him and talk to him whenever required. So the IBG Real Estate Executive Committee has Mr. Ruya, who's the director of Allstate Group. Myself, I run a startup called meetingsandoffices.com. We have Tahir Rautiwala, who's an architect, and his firm is called Effusion Designs. And of course, everybody knows Sangeet Hemant Kumar, founder and CEO SHK Ventures. What our charter is that we are looking at promoting the interest of the end consumer. And of course, representing all the industry issues to government bodies. And we have a hard focus on delivering value to our members. Next. The various member benefits, like I mentioned earlier, we are ensuring that members work with each other to develop each other's business. And our key focus is on collaboration other than the various other activities that we do under the IBG umbrella. Siddhi, next. This was the launch of Real Estate Vertical, where we had Mr. Sumit Anand and Deben Moza and Siddhi. And of course, we have earlier also done a webinar with Mr. Anuj Puri, but that was, I think, before the launch of the vertical. And we also take our members to various meetings with leaders in the industry. We had such one meeting with Mr. Niranjan Hiranandani. Siddhi, next. And of course, anybody who's looking at taking a membership or anything can just contact the IBG team. They will be sharing their details in the chat box. So please look us up. I would now just look at introducing the panel. And as Mr. Sanjay Dutt advised me, I will try and keep it short. Mr. Sanjay Dutt, he has over 26 years of experience in the real estate sector, and he's currently the MD and CEO of TATA Realty and Infrastructure Limited, where he's managing 53 projects measuring over 70 million square feet, besides 3 ropeways, 4 roadways, a metro project spread across 15 cities in India, Sri Lanka, and Maldives. He's also the chairman of Royal Institution of Chartered Surveyors and joint chairman of the FICCI Real Estate Committee. He's on the advisory council for GRI and GBCI and a member of CoreNet Global. He's also a part of the advisory board of Neredco and the co-chairman of ASSOCHAM Ease of Doing Business Council. And previously, he has been in leadership roles with Essendas Singbridge, Cushman Wakefield, JLL, and CBRE. Welcome, Sanjay. I hope I did a brief profile like you had asked. And we have with us Mr. Anuj Puri. Anuj is the chairman and founder of ANAROCK, which he set up in 2017. He has over 30 years of experience in Indian and global real estate markets and is a trusted advisor to developers, occupiers, and investors. He's widely acknowledged for revolutionizing the real estate sector with his visionary outlook and technology-based solutions. Until Feb 2017, Anuj was the chairman and country head of JLL India, overseeing a team of 9,000 employees in 11 cities. He was also a key member of JLL's Asia Pac Leadership Group and head of its Global Retail Leasing Board. He's, of course, received national and global recognition for his contributions to the sector, and he's also been associated with various industry forums in various capacities and serves on multiple public and private company boards across different sectors, including India's first REIT and Jagran Prakashan, India's leading publishing house, to name a few. Welcome, Anuj. Our next panelist is Mr. Saumyajit Roy, who's the founder and CEO of Emoha Elder. Saumyajit has been playing industry-leading roles specifically in the elder care space for over a decade, and otherwise he has a diverse experience of over 19 years. His passion for elder care and the product design construct for Emoha emerges from his personal experiences of taking care of his parents, in-laws, and years of working with elders across the country. Saumyajit holds a B.Tech in urban planning from SPA Delhi and an MBA from ISB Hyderabad. And he was the Young Leader awardee there as well. Welcome on board, Saumyajit.
Thank you. Thank you, Samir. Thank you so much.
The next panelist is Mr. Samir Jasuja, who's the CEO of PropEquity. He's a first-generation serial entrepreneur and has pioneered the creation of PropEquity, which is India's largest online real estate data and analytics platform. Nearly 80% of all investments in real estate in India by over 150 institutions and banks are made using the PropEquity intelligence. And Samir has been instrumental in creation of the Housing Startup Index for India. He's also co-anchored the most prominent reality TV shows in partnership with NDTV and CNBC, of which PropEquity is a knowledge partner. He's also been awarded as one of the top 150 leaders in Asia, along with PropEquity being awarded amongst the top 150 brands in Asia and GCC countries. Welcome on board, Samir.
So much.
And of course, not to miss out on our moderator, our very own member, Dr. And advocate Harshul Savla. He is the co-founder of Realty and research convener at CREDI and MCHI. Harshul is a principal partner of Realty, which is Suvidha Life Spaces, which has successfully completed more than 1.2 million square feet of real estate development in the last 30 years across Mumbai. CRISIL India recognized Harshul as the young thought leader, and Realty NXT featured him as Young Turk of real estate sector. Wow. He has won the prestigious CREDI MCHI Golden Pillar Award in the category of Best Debutant Real Estate Developer, and has also been awarded Young Achiever of the Year by ET Now, CNN, News 18, Zee Business, Maharashtra Times, ABP News, Midday, and Realty Quarter. Oh my God. We have, as everyone knows, a power-packed panel and an amazing moderator. Over to you, Harshul, now.
Thank you, Meenal, for that. Now we'll begin with the panel discussion. Warm welcome to all the panelists. So first and foremost, the topic and the theme of the webinar was inspiration to real estate. So the first question had to go along that. Anuj sir, the question is for you. You've been a veteran. You are a thought leader for real estate. What was your inspiration to real estate? What made you stick to real estate for more than 3 decades and continue going strong?
Thank you very much, Harshul. It's absolutely a delight to be on this panel. I've known Mr. Mitra Sen for some time. I saw him on the screen, and one of the thoughts came back to me. I had done a radio show with him. I don't know whether he remembers or not. I'd done a radio show, and it was like a fantastic radio show. He's a fun guy. He's a fun guy, and quite enjoyed listening to him. So thanks, Mr. Mitra Sen, for putting this together. Sangeet, who obviously all of us know in the real estate community, has been instrumental in bringing a lot of us together. So thanks, Sangeet. And Harshul, I was looking at the panel, and I was saying you and I have worked together. Saumyajit has worked together with us. Sanjay has worked together with us. I was thinking, Samir Jasuja ko lana padega. So, all of us would have worked together in our prior lives somewhere, and it is great fun to have this panel. What brought me, Harshul? I think most of us came into this field by accident. I can speak for Sanjay definitely that he came into this field when this field was really, not even emerging. It was infested with very disorganized players, Harshul. And so we came by accident. We were never trained in real estate. We've never studied real estate. We've not gone through the education. Unlike you, Harshul, who's gone through formal training and formal education, which is great, and we want that to happen. So we stumbled onto real estate and then discovered that there was a lot that had to be done in this segment. At a global scale, Harshul, you put real estate as one asset class, and you put all the other asset classes, equities, cash, gold, mutual funds, fixed deposits, everything together, still real estate is more expensive than all the other asset classes put together.
Wow.
And yet, Harshul, we didn't have professionalism. in this is, yet, there was very little investment into education. Yet there were very few people like yourself who were determined from day one that I wanted to get into this segment. And that's where we discovered that it was such a large asset class which did not have professionalism. And that's when we entered this and sort of stumbled. All of us come from very different backgrounds, not from real estate. And then continued with this over the last sort of 25 years. We've become sort of pros at it, and hence we have held on to this sector and not moving away, because you just get too much of information and data now that is there over the last 25 years, which unfortunately, Harshul, is not documented. So as a result of which, the experience, the exposure of what has happened over the last 25 years in Indian real estate makes you that much more knowledgeable. Had we gone into IT field or banking or FMCG, I don't think so any one of us would have been able to make as much impact. And I talk for you as well, Harshul. We wouldn't have been able to make as much impact as what we have been able to make on the real estate, because it just did not have professionals who came into this. Even today, if you were to look at it, I'm delighted that there is a lot of gender diversity on this on the screen. But otherwise, there's very little gender diversity only in real estate. People just don't. Women just don't want to come into real estate. So I'll just stop here for the time being.
Great. Sanjay, you've worked with the IPCs, you worked in the private equity fund space, and now you're working and you've donned the hat of a real estate developer. What inspired you to change these roles? What inspired you in real estate? And you continue going strong with this?
Harshul, first of all, when I started my career, like Anuj said, it was a discussion after my MBA program with my professor, J.D. Singh, in IMI. And at that time, the conclusion was that I want to work in a service industry in a high margin business. And the high margin was arms dealing. And then the second high margin business that we concluded was investment banking. But I settled for real estate because it was safer. However, after 30 years, what I realized that the industry is not probably as high margin as it used to be, but there is a high margin of satisfaction. When you're building homes and selling homes and fulfilling somebody's dream, it just gives you a very different joy when you, see those emotional video clips of people. And they tell stories that how their childhood was in this property and how they bought the first property from this so-and-so developer, and now they're buying again because they want to continue. So it has very strong emotional attachment to the subject. The other, if you look very strategically, real estate can also be described as a factor of production. So, when you set up office, industry, shop, you're producing something. It's either a goods or service. And it's basically very satisfying that you, contributing in some tangible way. Because earlier, like Anuj very rightly said, it wasn't looked upon as the right sector. So that, as a first mover advantage, you can call it, which worked in our favor, and subsequently we remained focused. I think our endeavor was, how can we make this a career for ourselves, and we remained focused. We did not deviate from this sector. So we continued, and I think we got the dividends towards the end. In short, we have now aged enough so the wine is tastier than it used to be.
Great, absolutely.
But the second part of your question, Harshul, is what made me change is continuous learning. I think I spent nearly 23 years in consulting, and it was always on the other side of the table when you're taking and you're advising people. However,
contrary to many management consulting firms who advise but not implement, they don't do the tactical implementation of the strategy that they propose. Real estate gave us the opportunity to actually implement the advice that we gave. You know, you do an advisory and then you acquire land and you build and then you sell or lease. You're basically walking the talk. After 23 years, I felt that I should go on the other side of the table and therefore, demonstrate to myself whether I can actually perform. And somebody asked me the difference. Consulting is all about 1%. So the development was actually the 99%, but it is that much riskier also because you're answerable for every penny, the decision that you're making. And if it's not producing wealth and for the shareholders and investors, the consequences are very dire, as you know. So it was basically to demonstrate to yourself that I chose to do that.
Absolutely. Wonderful. So real estate intelligence and data analytics has been a niche field. Samirji, what inspired you to enter in a sector with data analytics, which always worked on gut feel? So gut feel is how everyone took their decision. And what inspired you around this?
So first of all, thank you so much, Harshul and Sangeet. I think I can't tell you how special I feel to be in the panel with two of my super two people who I really have huge respect for, both Anuj and Sanjay, who I have both worked for in the past and know for many years now. In many ways, my journey in elder care has been something that Anuj and Sanjay have a role to play in it. Had they not ticked in the box, I would have been doing something else. And therefore, there is a reason and there is a story behind how JLL started the journey on the elder care side. And I think if I look at my own career, I feel it was destiny, which was playing some role in my getting into the sector. My mom kind of had started getting into dementia about 10 years back. And, thankfully, with all the things that knowledge came to me, she's kind of fine now. But, what I saw is that from my education in urban planning and design, and I thought urban planning and design, after urban planning and design, I'll get into urban planning, but I never did. I went into technology and spent 7 years doing a lot of international data, working in the US, working in the UK. And there was some fascinating projects like creating a addressing database for the whole United Kingdom, about 30 million addresses. So very crazy international projects on technology and so on. And after, when I did my management and there was a guy called Jappreet, a wonderful guy who hired me from JLL. Anuj knows Jappreet very well. And Jappreet told me that, we are opening up this new function in education, healthcare, and senior living. And would you be interested? And I found it very interesting as a thought process. That's how the first organization at a country level which wanted to create an alternate assets way back in 2009-10, I think Anuj would agree that there was nothing called alternate assets at that point of time. It was literally way ahead of its time. And Blackstones of the world abroad would have student housing REITs then, but nothing in India was being talked about from senior living or student housing and so on. So, and so it's not me. I think there's a larger divine conspiracy of growing this sector, growing this space with IPCs involved, with my own background involved, technology involved, data involved. And somehow I found myself, after spending 10, 12 years in consulting, exactly how Sanjay mentioned, the urge to implement, having written so many reports, you want to actually implement the report finally somewhere. And Max India and Antara Senior Living gave that perfect, blend to implement everything that we talked about in a beautiful project in Dehradun, and pretty much this part of the world's most fancy senior living development. But then it left a desire in my mind that what of my parents? What about the 100 million elders who would not go into an Antara or not go into a senior living development? And I think somewhere the definition of real estate in my mind changed, because you can run a car company without owning cars. You can run a real estate company without owning real estate. And therefore the thought process that, there are millions of homes out there. There are 100 million elders who stay in their own homes. Why can't we stream the best quality services? Back in 2004, we had done the algorithms for pizzas to come in 15 minutes into your own home. So if pizzas can come, why can't emergency come? Why can't doctors come? Why can't nurses come? Why can't oxygen cylinders come? And that prompted Emoha to get set up 3 years back. And I feel, when I was called for the real estate conference, I'm like, is this really real estate? But it is, this is also real estate. How we can bring in services and data and, technology and everything streaming into an elder's home who consumes anywhere between 30 to 50,000 rupees per month. That is also a spectrum of real estate. Real estate does not necessarily have to be only brick and mortar. So that's how, it's a blend of technology and data and, services that we do at Emoha now.
Indeed, it's wonderful to know how the real estate alternate asset class has been growing, and more of it as we move along with the panel. Thanks, Saumyajit, for that. Samir, thanks. Samir, PropEquity, data analytics, real estate intelligence. What inspired you to get into this space?
Thanks everybody for inviting me to the panel. And like Anuj said, he said it all actually. At the time we all got into real estate, it was by accident. I wanted to always be an entrepreneur, and I was in the capital markets and realized that capital markets will require a lot more capital, which I did not have to be able to set up a stockbroking company or so forth. So I got an opportunity to partner with Standard Chartered Bank to do housing finance and property services. So 1 year I was at the age of 26 just exploring business ideas, and this idea finally fell into my lap, and I got into real estate purely by default. And getting into real estate at that time, a friend of mine, Manish, who's a very senior professional in CBRE, when I went to meet him, he said that girls don't want to even marry you if you're in real estate. It was so looked down upon at that point in time. I'm talking about way back in 1997, when real estate brokerage was just mom and pop shops, really operating out of one room homes when these big IPCs came along. So when I got into real estate and thinking out of the box has been my biggest strength, I decided to start capturing data on individual homes, so that when I got a client, he would trust me, and I would remove all the opaqueness in the system by showing him all the properties that exist on a computer, so that he could make the right informed decision, including knowing what the last price the rental was traded at. So I tried to make this more scientific as much as I could. But unfortunately, at that point in time, I failed. The internet was too slow. I could not distribute this information to large brokers and all that. And I always wanted to be in a safe annuity business model. So then I went on to work with a developer. And when I was heading private equity and marketing, I realized an FDI had opened up in real estate. I realized that I had some capability in data capturing, in technology, and why not now use this for the institutional sector. So that's how PropEquity was born. And I used, like Steve Jobs said, connecting all the dots. So all the dots connected very beautifully, that I got into brokerage, I then got into collecting data, then to technology, and finally built a product around that for the right segment. So that's been pretty much my journey, and it's been very rewarding because I got to be an entrepreneur, I got to sell a company, I got to buy back the company. And today we are a team of 190 people trying to remove all the vagueness in the sector. Unfortunately, we still take a lot of gut-based decisions in this sector. I'm praying to God that one day that all changes, although it's improved substantially, but still a long way to go to deploy technology and deploy data and analytics by all, because real estate is a very heavy capital intensive business, and it requires that kind of analytics and data as it is available now to be able to take informed right decisions. And as far as Anuj sir is concerned, sir, any day ready to join you. Whenever you hire me, I'll be there.
I'm going to vacate my chair.
I'm not as competent as you are, so or your people are. So I'm happy to work number 2, number 3, wherever you hire me.
No, that's very kind. Harshul, if we can ask you this question, because we are of a certain age profile. Obviously, Saumyajit is a bit younger to us, but you're the youngest. So sort of what prompted you to get into real estate, one? And if I can ask a subsequent question to that is, I also think you're probably the most educated amongst this panel from a qualification point of view. So what is the enthusiasm that you have to continue pursuing your education, and specializing in real estate? I mean, you come from a very wealthy background. You've got everything that is available with you, yet you chose real estate sector. And not only that, you become a developer. I'm an intelligent, educated developer. I mean, it's like sort of quite a contradiction there.
Thank you, Anuj sir. So basically, as our family business was into retail and real estate, so it was always one of the two. But after attaining formal education, working at JLL, I think I was pretty clear that real estate is where my liking and passion was, clearly, instead of retail. So I pursued my passion. As far as academics goes, I strongly believe that, when you merge academia along with practice, it really helps you in your decision making. It really helps you give clarity of thought. And this was something I learned personally from the way medical profession works. So, the doctors regularly every year, they have these conferences where they have a lot of peer learning. So they keep themselves updated with a lot of these peer learning knowledge series. So which is where my idea was that if I could keep myself updated with trends, and now fortunately real estate development is also becoming more of paperwork, more of regulations than what it was. I think last 7 years, we've seen more than 7 acts come into practice. So all the developers are forced to sit and open those books and regulations and go through things, and that happens when any sector goes the organized way. So I think personally for me that has been a passion, and it has been a blessing to have a combination of the two things. But personally, I would say, sir, the stint at JLL under you was really a game changer and helped me decide. There was a strong point when I was happy getting into the retail venture of ours, and I opted into real estate. Thank you, Anuj sir, for that. Now we'll get more into the sector and what's happening. There are a lot of questions around there, which also came from participants. At this point, I would suggest that whatever questions come, please feel free to put them on the chat box. After the panel is over, we would pick up those questions and put it forward to the panelists. So the first question around the sector goes that just when the real estate sector was looking to come back on track in Maharashtra, restrictions in view of the second wave were imposed, which more or less broke the momentum which got going. So there was the stamp duty cut, premium cut, everything just seemed to get onto the right pace. And that whole momentum, which was achieved with great difficulty by a lot of developers and stakeholders, sort of broke. And the fear of third wave continues to loom. So there's always this talk that abroad third and fourth waves are on. So, and psychologically people are breaking. Government has really ignored the sector in this second wave. So what are the prospects of real estate as a sector in 21-22? So first, I would ask you, Anuj sir, what do you feel are the prospects? It's not a very clear vision for all the stakeholders right now.
So Harshul, you're right in what you said is that after the first wave, the market had bounced back quite nicely. I mean, you're aware of it. October to March was pretty decent. The way the market bounced back, resi sales was getting back, the retail opened up, and the top 25 malls, the data shows that 85% of the footfalls was back in those top 25 malls of India. 85% of the revenue was back in there. So it was like a V-shaped recovery that we'd seen on the retail. And on the offices, Harshul, we'd started to see the non-tech guys start to come back into work. LRB, there was a hybrid structure. Hybrid means that, you would go back to your core office, or it would be like a co-working environment, flex office, or it would be work from anywhere. But yet we had started to see many people getting back onto the office. And then suddenly end of March, this second wave came in and really broke the back. Because momentum had come out beautifully on all the three segments. As the second wave is withdrawing, Harshul, on the retail, we're seeing, which is the first one that got opened up. Gujarat is, one of the benchmarks because they've opened up the malls earliest. We haven't seen the V-shaped recovery come back this time in the malls. We're seeing more like U-shaped recovery come back. Even now we are probably the third week into opening up of malls in Gujarat. We're about 35-40%, not like what we had seen after the first wave. So I don't know whether it's the sentiment this time that has broken, whether it's the health issues that have come in, whether it's the spend on the health that many families have had to do in the second wave. When it comes to offices, and Sanjay is much better expert on that. My thought is that until the vaccination, the second vaccine, doesn't come in, not many organizations are going to go back to full work. Are they going to go back to work? I mean, if you look at it, Sanjay and I are in our office. So we do believe is, from collaboration, teamwork, innovation, just gossip in the office next to the water cooler, I think it is going to be very important. So we do feel is that it is going to come back. Is it going to come back exactly the same way as it was before COVID? Not really, Harshul. I think, work from home is here to stay. Work from anywhere is here to stay. And, I'd love to hear Sanjay's comments more on that. I'll just cover very quickly on the residential. Mr. Mitra Sen said this is that the prices haven't come down, and that's because the demand just came back roaring. Somewhere, Harshul, roti, kapda or makan. That makan, we had forgotten. And so we've seen that come back. Majority of the buy has been prompted by the millennials this time. So the new home buying by millennials, many millennials have actually upgraded. They were in one bedroom, they moved into 2 bedroom. Either they're planning to start a family or both husband and wife are working and they need 2 rooms, and hence they're doing the upgradation. We've seen demand for larger apartments instead of 2 bedroom, 2.5, instead of 3, 3.5. We've seen a lot of demand for luxury projects, particularly in Bombay, where we've seen a huge amount of capital appreciation happen in those projects. We've seen demand for weekend homes, plotted developments. We've seen a lot of demand moving away towards the periphery of the city. They want larger apartments. They don't mind moving a little bit away from the central business district to the periphery of the city. But one thing that we've noticed, Harshul, in a big way is the consolidation of developers. And this is where we think is that many of the sort of B-C grade developers are going to exit. A grade developers will remain, or B+ developers will remain. And the reason for that is very simple, that the consumer who's on the screen is not willing to buy under construction of a C grade developer. Even if the price is much lower of a C grade developer, they're saying to the C grade developer, Mr. Developer, you complete the project, we're happy to buy. But they're very happy to buy Sanjay's project. Sanjay, who represents Tata Housing, they're very happy to buy under construction from Sanjay because they know that Tata Housing is going to complete it. Even if Sanjay is at a slight premium, 10-15% to another developer who's adjoining wall, they will not want to buy, which was not the case in 2008 after the global financial crisis happened. At that time, the buyer was not as discerning. So they got lured with a reduced price. This time the buyer is saying, no guys, I want to go to a grade quality developer because I don't trust a C grade. He's not or she's not going to be able to deliver it. RERA is there. But what will RERA do? Many people that I speak with, Harshul, they say, what will RERA do? RERA will put the developer in jail. I'll not get my property. So I want to go to a grade A quality developer, be a C grade developer. If he completes it, I'm happy to buy it. Equally, the banks are very reluctant to lend to a C grade developer. So, if you're not getting financing through pre-sales or during construction, you're not getting money from NBFCs or banks, then either you have to have your own equity to complete it as a C grade developer, or you will have to merge it with an A grade developer. And I know that Sanjay gets probably 2 or 3 proposals every day coming in from these developers to say, Sanjay, with Tata Housing name, you'll be able to go out and sell. Why don't you merge this project with our project? So that's where I think is that 21-22 story has gone in. Last thing that I would say is, Harshul, that Bombay opened up really last weekend. I would say is, I mean, we sell about 18,000 apartments a year. Harshul, the footfalls were between 45 to 60% of the January level. So Harshul, not bad. I'm like pleasantly surprised that, yesterday I was just sitting down with the teams who came in, reporting what the weekend sales was. It did rain this weekend. Usually if there's a heavy rain, the footfalls are lesser, but still, first weekend, 40 to 65% footfalls back very quickly at the site. So it does look like that, even after the second wave, there should be a decent bounce back, at least on the resi side.
Wow, that's encouraging. Thank you, Anuj. Sanjay, as a developer, how do you view the prospects of the sector in 21-22? Despite the premium cut, there isn't a lot of activity around launches. Stamp duty cut is off. There is no discussion around a fresh cut coming in stamp duty. How do you view the sector? Are you looking at new launches? What's the strategy as a developer?
We are generally overall encouraged by these circumstances. We think it's a brilliant opportunity for a reputed branded developer who already has very high governance, compliance, and brand loyalty with the customer. So we think it's an opportunity. I think the last 30 years, we've never seen land valuations correct, which we witnessed. More importantly, far better deals in terms of joint development agreements, joint ventures available in the market. So, and you can choose selectively. You can be very selective in your approach. Also, I think the recent ups and downs and regulations and landscape changes have now given you sufficient idea of what business model will work going forward. You see, there was a period of ignorance, then there was a period of transition, and there is now going to be a period of growth. I think having learned that last 3-4 years, I think as an industry, not just Tata Housing, as an industry, we are at the cusp of molding our business to take advantage of the opportunity. And I think that's the way we see it. We will be raising 2,000 to 3,000 crore of capital from investors. We already have 5 projects which are owned and in partnership with some of our partners, which we're going to be launching soon. We delayed it purposely because of pandemic, and also we needed to rejig our product. On a very different note, if you look at the private equity interest, and you mentioned about stock market interest, I think Sir also mentioned, the reason why it continues to flow in because they can see it, that while there are fewer but better, beside the transparency of the market and the industry overall. So things are only getting better. I know it will also cause a lot of pain to, like Anuj mentioned, to tier 2, tier 3 developers, but eventually it will help. Maybe they can become land traders, which they used to, and make more money. I think many of the land traders have realized they make more money than the developer does. So all those learnings is helping. And the one change that I see going forward, that will not be product, it'll be product experience and the service. And the reason I say that is, we used to use the terminology called customer centricity. I have stopped using that terminology because I think it's very dated. The expression that we are using now is customer obsession. And the reason I put so much of emphasis on this is many companies will become customer centric, but they're already late. If you're not customer obsessed, if you're not deep in your product design and development execution to be able to service the customer from sustainability to wellness, to needs, to recreation, to health, your products will not actually do, or will get a premium that you thought at one time that you would. And I think the Indian buyers are very smart. They're very well traveled. they're well read, their expectation, their aspirations are very strong, and they do not want to compromise. And they wanted all of that cheap, by the way, in addition to all of that. So this requires a certain level of discipline in your business, certain level of agility and commitment to customer obsession. Only then I believe you will succeed in the times to come.
Thanks, Sanjay, for that. Saumyajit ji, the alternate asset class, especially in the last 5 years, has been bustling with a lot of activity. This pandemic clearly threw open that healthcare, education, or the elder living. This was of utmost importance. What are your views for 2021-22? How will this sector further shape up? Do you see more investments coming into alternate asset care?
No, Ashul, so I think it's been, I would say it's been a landmark year. 2020 and 2021 has pretty much shown how broken our country is from an elder care standpoint. I think I narrowly, almost lost my father-in-law, and went through the family, both my family, my in-laws' family, all of us went through COVID. We have 3,400 elders in our community, all staying in their own homes. There was a period from 15th of April till about 15th of May where we're losing almost 2 to 3 elders every day. And these are people staying in your societies, in societies where, developers have built projects. And let's ask ourselves, if you have a society where an 85-year-old is staying on her own, maybe an elderly lady staying alone, how much criteria did we really give attention to designing the finer nuances? Exactly what Sanjay was mentioning, that, can that person truly stay alone? Are we truly being able to give the kind of comfort, care, convenience that we, kind of promised in the beginning? And that depth of design and detail, it doesn't have to be a senior living project. It can be an intergenerational project, it can be a project where a bunch of, facilities are being provided. But the differentiation of truly being healthcare enabled, wellness enabled, and, safety, security, everything enabled place where an elder can stay is something that we have to ask ourselves and go back to the design board. I think the definition, back in my architecture planning days, the definition of what is residential, what is commercial, what is, institutional, I think these definitions are getting blended. And many of us who are, working from home or having healthcare facilities, we are managing about 15, large condominiums in Gurgaon, from Magnolias to many other condominiums, are with the elderly care partner for more than a year now. And I never thought this is possible. I never thought that something like a DLF Magnolias and Aralias would, employ us as Emoha for taking care of elderly needs in that society. The fact is that 80%, to 85% of your customers happen to be elders, and therefore they have specified needs. They have healthcare needs. And not everybody wants to move into a, senior living in their mind and old age home project. They want to stay in a, intergenerational project, and therefore, how can a developer create an asset which allows them to have a life where they can be taken care in case there's an emergency at 3 a.m. in the morning, if they have a fall in the day, or if they have healthcare needs. I think the future is increasingly going to be projects where collaboration happens, where the projects can be traditional real estate, but the amount of need that is coming up for elders to be comfortable that in their existing home or in the projects that they invest into, they would want to see what is the plan for health, what is the plan for in the event there's an emergency, how is the project going to be taking care of me? Can I do other activities apart from just staying? Is there a place where I can work in the condominium? Is there a place where I can, get myself checked, get myself vaccinated? A lot of these, projects where we are working in closely are finding it difficult because the place was not designed for healthcare. The place was not designed for some of these things. And today, the projects which are doing well are projects where the families are saying that it was designed well. I see a lot of demand for recalibrations of families where they are saying that I can't have my parents staying alone in Gurgaon or Bombay or Pune. The demand for joint units which are specific designs where it could be 2 apartments together. It could be where one member is staying in one part of the society and another in another part of the society, or 6-bedroom, 5-bedroom units where the parents can have their own independence and the children can have their specified designs of this nature. I see increasing a lot, and therefore the need for service-based accommodations for senior living, I see a massive trend increase. I definitely see good quality supply will be defining good quality demand.
Great, Saumyajit. I think this really opens up a lot of mind space of developers as well as all stakeholders to alternate care, which is clearly the field of the future. Samir, what do the numbers indicate? What is the Mumbaikar's preference? Are they looking at bigger homes? Are they looking at new houses? Are they looking in the secondary market? What has the analytics thrown up as a trend for Mumbaikars?
Well, we recently came out with a report where not only in Mumbai, but in other parts of the tier one cities, the demand for 3 bedrooms has gone up by 21% compared to what it was before the pandemic. So that clearly translates into the fact that bigger homes are the need of the hour today, and every panelist has also maintained the same, and that's what we're seeing in the data. October to March were phenomenal months for Mumbai and MMR region. The peak absorption over the last 10 years has been witnessed in the last 6 months. Having said that, just to let our viewers know that the peak absorption in India used to be between 11 and 13. So that time, many cities like NCR, for example, sold 90,000 units. It's down to 4,000 units today. Literally, I'm talking about Noida. But if you're talking about MMR, the peak absorption rates have touched over 1 lakh units, in 1,08,000 units to be precise, in the last 1 year. And that has been the peak performance ever over the last decade as such. May has seen a 50% drop. So what we anticipated was that because of the stamp duty cuts and housing finance coming to an all-time low, we did see unprecedented amount of demand, but May has been a little dismal, which is understandable because of the lockdown and because of overbuying, I would say, in October to March 2 quarters. Having said that, I think residential real estate demand is here to stay. We've hit the bottom in terms of pricing. Construction costs are also going up. Steel has gone up quite a bit. Cement is going up quite a bit. Developers have really not increased pricing over the last, I would say, 7 to 8 years. Inflation-led pricing has been the nature of the appreciation that has happened over the last 10 years. We also anticipate that the supply over the last 5 years has really come down. So on an average, when we used to launch about 4.5 lakh units a year, it's come down to 2.5 to 3 lakh units a year. And that is going to start showing up in 2024, 2023, 24 onwards. So we do anticipate price appreciation. We do anticipate developers now planning bigger units because the units that have already been launched were rightly priced and rightly sized from a price point of view. So the sizes were smaller. So that impact is going to be seen in the next 2 to 3 years. But the planning that happens now and for homes that are going to be delivered in 2025 and 2026 will be slightly more larger. That's what we're seeing. What Anuj also pointed out was that there was a serious amount of consolidation in the market. There has been a serious amount of consolidation in the market in certain cities. Cities which have done very well to our surprise, which is Hyderabad, Pune, Thane, have seen developers, the number of developers increase also. So it's a mixed bag out there for tier one cities, where certain cities like NCR, where developers have been decimated, have come down by 90%, and Chennai has come down by 50-60%. But certain areas and cities, developers have gone up also. So having said that, I definitely do believe that bigger is going to come back into play. Luxury will be in demand in the coming quarters, as and when India starts to open up and vaccinate.
That's amazing. And that really brings me to the next question, which is, I'll want the experts to address the elephant in the room. Will the real estate prices appreciate, go up? We've heard the analytics side of it, but there is also a practical side of it where consumers are continuously expecting the prices to drop. And every year, whether it's an FSI announcement or whether it's a stamp duty cut, they just feel the prices have to crash, not realizing that actually real estate is nothing but 250 industries coming together to build a product. So we have a similar industry like automobile, which is 80 to 100 industries coming together to make a car. a car which costed 7 lakhs is today costing 18 lakhs, and it's overbooked by more than a year. But when it comes to real estate, which requires 250 products, and each of whose prices have gone up disproportionately. I mean, they are case studies in themselves, but still there is an expectation that the price will cut. Anuj sir, Sanjay sir, what's your take on the pricing story?
I'll say 2-3 things, Harshul, is that, this expectation has been there. It's an evergreen expectation from the buyers. And, also interestingly, Harshul, I've seen how the human psychology works is that until you've got your house, you don't want the prices to go up. The moment you bought your house, you want to see the appreciation in the price happen very quickly. Look, Harshul, answer is very simple. If it had to go down, it would have gone down by now. We've seen the worst crisis. If in these times, we've not been able to see any significant correction in the price, other than the C-grade developers under construction who have brought down the price. But fortunately, the sales hasn't happened, Harshul, because people have understood is that even if they were to bring down the price, the developer is just not going to be able to complete the project. So clearly they have not gone in there. Otherwise, the prices haven't come down. It is true. I think Samir mentioned it earlier that, many projects we've seen capital appreciation. Certainly, Harshul, in Bombay, in the premium and luxury, we've seen between a 5 to 17% appreciation in the price during these times. Sanjay will be better at it, but I can say on his behalf, and maybe he can elucidate further. The cost of construction, Harshul, has significantly gone up. For the last 5 years, if you were to look at it, the pace at which the real estate has increased is far lower in pricing than the way the salaries and incomes have gone up. Your reduction in the cost of home ownership has come down dramatically as a multiple of the income over the last 5 years. So really the developers have not been able to price the additional cost of construction, whether it is the additional labor, whether it's the steel pricing, cement pricing, approvals, that have all gone up and hasn't really been passed on to the consumer. If you pick up the balance sheet of majority of the listed developers, you will see that it's a single-digit percentage margin that they are operating on. So clearly, Harshul, the new projects, why would I want to do it at a single-digit percentage margin when the risk is so high, when the effort is so high? And if the reward is not going to be commensurate to that, is unlikely that I'm going to pour new concrete on those new developments. Yes, I will complete whatever needs to be completed, deliver, because I just don't want to be out of law in that is, but the intent is not going to be is that I will continue to pour new supply at a price which is perhaps going to give me a loss or a very low margin in comparison to the risk versus reward. So in a nutshell, what I would say is, Harshul, very difficult for prices to go down. I'm only saying is if it had to go down, this would have been the worst period it should have gone down. I don't think so. We have had an event like this. We haven't seen after demonetization any significant downward trend. We didn't see after GST, after RERA. I mean, this pandemic has broken the back. And yes, it has gone down, but guys, just be careful if you are going and buying into a project where the prices have substantially gone down and it is under construction. You just need to be careful that it should not be penny wise, pound foolish, and you bought into a property which is not going to get completed ever, and the money that you have paid has actually gone towards clearing the debt of the developer, and he's paid the NBFC the money that you have given him to buy your dream home. Sanjay?
So well put. Yeah. So well put.
So I'll just quickly summarize some points. I think people have misunderstood liquidation of excessive inventory last 3 to 4 years as price correction. That is one point. Second, the actual cost of construction, which Anuj very rightly said, the minimum wages by the government have gone up by 25 to 30%. Steel, cement, with highest GST has gone up by over 50% in last 1 year alone. I'm not even counting the previous year. So irrespective of pandemic or whatever, the cost of capital, it's amongst the highest in the world. So if you want to invest in business and borrow at 14 to 18%, there is no way you will ever make margin. There are only two things have come down. One is the size of the apartment, so the affordability can happen. Okay. And the delta between under construction and ready, because ready was more and GST not being there, sold better. However, I believe one of the reasons why tier 3 developers will not be around for too long is there'll be now a significant shift from the lending side of the business. They will differentiate cost of capital to tier 1 to tier 3. And the tier 1 will be able to raise capital for sub 8% single digit cost of capital versus others who would raise double digit, even if it's low double digit, 10, but majority would still be at 12 to 14%. So with this spread gap, now the other thing which has been added to this is the cost of compliance and regulatory. You see, earlier you could get away with it. Now the RERA defines the default liability period of 5 years. There are certain provisions in the interest of the customers and the consumers, which is good for the sector. So any short-term strategy to escape and build margin by cutting corners, that era is long gone, and therefore the industry will consolidate. And therefore, I believe I've already seen a symbolic increase in prices in all Tata housing projects. And we will continue to do so because so far we've given, because the rest of the industry was low. But now things are fast changing. And I think Samir said it, the inventory is coming down. And more importantly, the relevant inventory, the projects where you and I would like to live, not invest. You can invest in Panvel, but you'll still live in Bombay city itself, right? So the relevant supply would get more weightage, in my opinion.
Very well summed up. So I think one question from an investor perspective, and
sorry, Anuj was trying to say something, Harshal.
Oh, sorry.
Anuj, you're on mute. You're still muted. Yeah.
So I was only going to say, as Harshal, on the chat, I'm seeing, questions coming on the pricing. And, I do want to address, because it is an elephant in the room, as you rightly said, is I will pick up, what Sanjay's word is. Relevant inventory. People are just not understanding that there is a lot of unsold inventory. Yes, there is a lot of unsold inventory. One, it is not relevant to you. Either they are very large apartments which are out of the reach of many people, or they're in the wrong location that have been built, or these apartments don't have the right approvals. They've been built, but they don't have the right approvals. But they're figuring in unsold inventory. Or second is, Harshal, that there are a lot of incomplete apartments which are figuring in unsold inventory, but there the developer has either run away to some other country and there is no developer of that is, or if a new developer was to come in, the balance money that is yet to be received from the unsold inventory and the sold inventory is insufficient to complete those projects. So please understand, the word that Sanjay is using is that the relevant inventory is not enough. If it was enough, why would the prices not come down? Nobody can, form a cartel. Many people think that they can form a cartel. You can't form a cartel of 22,000 developers in India who have all got their own, thought process. So I'm not a developer, so I have no angst in this. I'm just saying is that, guys, don't be misled. And then, in the city of Bombay, you see the way the prices have gone up over the last few quarters. And it will continue to go up because I'm seeing the profit margins that the developers are earning. It is just not sufficient for them to be able to do it. So please, when you're saying unsold inventory, and maybe Sanjay, you can elaborate, because that is going on big time. And these are all home buyers. So I just want to make sure that they understand that they look at some inventory, which, by the way, Samir has anyway clarified that the unsold inventory has come down. But, guys, it is the relevant unsold inventory you need to look at it. Sanjay, go ahead. Sorry, he's on mute. I think, Sangeet, you'll have to unmute.
Pricing discussion is always the best to, get the room going.
Harshal, I'll tell you, even the distress fund set up by Government of India against the requirement of 3 lakh crores is only providing 20,000 crores. And even there, the cost of capital is 12 to 14%. And it's only for affordable segment last mile funding. So things are not really sorted, as Anuj very rightly said. So eventually, NBFCs who have a charge will have to take a haircut to allow these projects to come for last mile funding, so that the last mile funder can first take the money out and then make something out of that project, provided developer has some interest left in the project at all. Otherwise, they will say, if I've lost money, then why should I sweat it out?
Absolutely. Yeah. Absolutely. I think Swami kind of model is required in real estate, which really differentiates the sector from the others. I think, I'll have a quick one from an investor perspective. So investors in the last decade had sort of deserted the real estate sector. I mean, they started moving to other asset classes. They didn't see the appreciation. But surprisingly, with 3 or 4 asset classes, the investors are coming back. So one is with the REITs. A lot of and individual investors are interested. Fractional ownership has started picking up, although it's not a very fashion in which it's going on. But that has seen a lot of interest. Second homes and vacation homes are on fire. Everyone wants to have a plotted development to themselves. So what is the view of the room around that? So investors coming back to real estate with these asset classes. And do you think, will it sustain, Anuj?
So Harshal, you've said quite a few things, in that is. So I would start with residential. We don't see investors or speculators coming in very large number. Yes, they will be 5, 10, 15%. But, Harshal, they're not really speculators. They are long-term investors, who want to buy a house today because they have a growing family and they may need it in 5, 7 years time, or they're buying a house today that they want to rent it out. So, it's only between 5 to 15%, depending on city to city, more in north and less in south. So that's the first thing. The second is on the REIT. Harshal, these are very evolved investors who have come in. These are largely ultra high net worth individuals or institutions who've gone in. And REIT is, little sort of sophisticated product for, a retail investor to understand. But I do feel is that if you want to play a proxy on investment for office, it's a very good product as a retail investor to get in. You get tax-free return, which is much higher than what you get on a fixed deposit, and hopefully there will be some movement, positive movement on the share price, and hence you are able to make some stock gains on that. But that is very sort of institutional high net worth individuals. Then you mentioned about the fractional ownership. As you rightly said, it just started. It's probably very early days. Again, only savvy investors are being able to understand it. Although the ticket price there is 25 lakh onward, so it's a smaller ticket price that you can enter into it is. And we're seeing a lot of the prop tech companies get into the fractional ownership. I'm not big on it as yet. My guess is, it needs to be seen over the next few years, how they liquidate the asset that they have bought, and what happens if there is a tenant who vacates it because you've given fractional ownership to these guys. Where we are seeing investors come in is definitely on the plotted development. And that, Harshal, we are seeing a lot of the NRIs. wanting to buy plotted development because they have seen capital appreciation in that. Also, they don't need to pay really any charges towards it. You buy it today. When you come back to India 10, 15 years later, you'll be able to construct it. People living in cities other than where their hometown is are wanting to buy plots in their hometown that aaj khareed ke rakh lo. 10 years later, when you want to develop it, you'll develop it. Usually in the past, we've also seen a very high capital appreciation on plotted developments. Indians love land. Indians love real estate, and NRIs definitely they are big time on that. Lastly, on the weekend homes, this is a complete end user. Definitely in Bombay, Alibag is absolutely on fire. I mean, what you would get it per katha before the pandemic, you're really between 25 to 40% ahead in the last 12 months. In Alibag, because weekend homes is like absolutely Lonavala, Alibag. I mean, Sanjay had a project for a very long time in Lonavala. We just sold it like cut, because these were all completed units, Harshul. Pre-pandemic, they were very slowly going. As the pandemic hit, all his Lonavala inventory just got sold completely.
Sanjay, your thoughts quickly on the whole trend around investors?
First of all, the private equity investment, the institutional foreign direct investment will continue to flow to India. I think you can take $4 to $5 billion US on an average. The structural, things at the background that are playing into India's advantage is a certainty of return in commercial, which is very mature, like Anuj said, in terms of stability of return. Second, the other aspect is the dollar-rupee situation. The dollar-rupee relationship last 2 or 3 decades was very volatile. So investors came in at 35, 40, and they took the money out at 70. Okay, now we are talking about stable 70s, mid 70s, and at best, it may move to 80, that too over a decade. So when you take the money in and you calculate your dollar returns, you will make money. Second, the certainty of money will be very attractive for the foreign investors, especially the sovereigns who are okay to live with lower returns, lower dollar returns, but they don't want to compromise the certainty. When it comes to domestic investors, I think alternate class returns or the cost of capital, as I've said earlier, has come down. And therefore, there is an expectation reset. If you were to buy a dukaan, a rented dukaan to a bank, you will be willing to buy at a 5% net yield. Okay? This is an investor, HNI, who would like to pay because bank will be there for 15, 20 years. Again, certainty of return is very important. I think the same will happen with office, same will happen with industrial. So your yield expectation of domestic investors will come down, and why not, if the cost of capital is coming down, if the FD rates are coming down, other than the equity, which seems to be on steroids right now, but not everybody understands equity. So I think there will be a return of investor class to real estate for the reasons I just mentioned.
Great. So I think watching the time, we will move to questions. There are a lot on the chat box which were also answered. There's some which have been sent to me during the course of the discussion. I'll pick up. Okay, one of the question is, how do you look at the whole real estate scenario after RERA, GST, IBC, NCLT, and all these regulations come together? Is it poised really for strong growth? And is that one of the reasons why you see a lot of 1,000 crore plus single deals happening in the real estate sector of late? Any one of you all, Saumyajit, Samir, anyone, you all could have a take at that.
Well, if I have to give my 2 bits, I think all these factors have played a very big role in creating the transparency in the sector. Creating regulation in the sector has been very important. It was totally unregulated, and it has given the confidence to the FIs and foreign direct investors to come in and be able to invest safely with the right players and have a certainty in exit, and not waiting, not waiting to know that whether they will get an exit or not at all. So that has been one of the, I think the government has taken many steps in the right direction, and now the model tenant code has also come about in the last 2-3 days. So the government is doing its bit. The consolidation of developers have happened, and the men from the boys have been separated. So the men who are left, or the tier 1 developers and tier 2 developers who are left, they are seeing attractive interest in these FDI players coming in and putting in money with them and developing assets. They know the cycle is about to turn. That's the most important part, that the inventory overhang after 6 years has come down below 24 months, which is a very safe zone for all tier 1 cities put together. In certain cities, it's as low as 17 months. And there are certain cities that are performing outstandingly well, even in the pandemic and post the pandemic. So there is genuine interest with the right players. So the industry has matured. I would say when the industry matures and it is one of the largest asset classes, you will definitely see a lot of investment coming in, and these guys want to do larger deals, and there is appetite for being able to do a larger deal, a larger scale development. We've also noticed that the top tier 1 developers market share has gone up from 5% to 15% over the last 5 years in terms of number of units. So that also suggests that, the top 50 developers, top 25 developers want to do large projects for which larger equity is required, and FDI investors are more than happy to pump in that kind of money. Although most of the money till now has come in the commercial sector, but it is the tide is turning and investors have started to look at residential again.
Sanjay, you wanted to add? Yeah.
Very quickly, on a lighter note, I wanted to say it was disruptive. And after disruption, it is leading to growth. At the expense of many, you will perish. We all know that. The other thing is, while the government has brought about regulatory changes and transparency, they have conveniently kept themselves outside. So the Godfather dictates still. That's all.
Very, very well put up.
Yes, so just one. I'm having been in technology and then been in real estate and then back to services. I want to really give an example of insurance. Insurance is by far the most regulated segment. You would all agree that IITA has a strong hold on everything around insurance. And when I was with Max, we were trying to do a lot of work between the Max Life and the Max Insurance and health insurance and so on. So creating a product in real estate, trust me, if it is on a 0 to 100 scale, if it is 100, creating a product in insurance is probably 10,000 times more difficult to create a product, right? But here's the take. ACCO, which is insurance at its most native format, broke the back of how insurance companies are looking at product creation with micro bit-sized technology-backed insurance, and it has changed. It is giving the complete insurance market a run for the money. I think regulation is bound to be there. I think these are things which are bound to be there, and we should all welcome it, because I bought one house in my whole career, and that house is stuck because of NCLT proceedings. So as a user, I can tell you the frustration of an end user when you see that the developer is not delivering 5-7 years after the delivery date was supposed to get done, and there are millions of such people out there. So I think the point is not about regulations. I think the point is about design innovations. It's about micro bit size innovations. People are not wanting to make these 2 crore, 3 crore, 50 lakhs, 1 crore kind of things. They're wanting to do smaller size innovations. And between technology and services, I think there is reinvention possibilities which are there. Much the same way as Meru got taken over by Ola and Uber, and Airbnb took over hospitality, and so many of such kind of examples. I think there is a lot of opportunities at the other side of the tunnel, but we have to reset the clock. It cannot be with the same mindset that you put in land and cement and steel and some sales and marketing budget and you have a real estate project. I think that mindset has to go, and that's what I would definitely want to say. There is innovations, there is opportunities, but the mindset has to change.
Sanjay, you wanted to add something?
No.
So we'll take the last question, which is around very interesting one. The mom and pop shops, the entire game changed with the advent of malls. They changed the retail game. And now with warehousing picking up, do you see the high street and these malls really taking a beat even after the pandemic gets over due to the mushrooming growth of warehousing and the low rentals at which they are available despite being closer to the city, and the consumer moving more towards e-buying sort of a scenario which they were forced to, but now they're comfortable doing that. So what's your take on that, Anuj?
So Harshul, this is one subject where I would say is we differentiate from the West, from more mature economies. Other than that, we continue to follow the West, whether it is the practices on the office, work from home, work from anywhere, whether it's the private equity, whether it's the residential maturity curve that we are doing it. On the retail, why I say is that we differ because Europe and US will go through a very bad period of retail real estate. In India, two aspects that go in favor of retail real estate. One, we as a country are very under-penetrated for organized retail real estate. I mean, if you look at it, we don't have the kind of malls the way that you have all spread out in Europe or the US. So we are very under-penetrated one. Second is for us, mall is a place where you get together. It's a place that socially that you come together to interact. I mean, on a Sunday, Harshal, what would we discuss? Oh, let's go to this mall. I'm going to do a little bit of shopping. We're going to watch a movie. We're going to eat something and then come back. We don't have museums. We don't have museums. We don't have parks. We don't have other activities to entertain ourselves. Third, is e-commerce here? Absolutely. Is e-commerce going to redefine the malls? 100%. So, Harshal, I'll give you an example. My parents live in Delhi. And, during this pandemic, my children taught my parents, their grandparents, how to buy online the vegetables because they didn't want them to go out. Now, my mom is so used to buying, from one of these e-commerce sites that she finds it so easy. She doesn't have to give the money. It is all through the credit card. She's not exchanging notes, rupees. She's not getting it weighed through, a stone on one end, which was put in Delhi. And then, you're weighing it that way. Would she go back after, all this settles? I doubt it. That she's going to go back and physically buying a grocery. So the malls will have to evolve. They will have to take into practice. I mean, I wear white shirts most of the time. And I used to go to a showroom to buy these white shirts. Today, I haven't. In the last 1.5 years, I haven't. And actually, I'm very happy because I'm not going to go to the mall now to buy a white shirt, which I used to do it earlier. So the malls will have to evolve the product. What they are selling, what is available on e-commerce is not going to be what should be sold in a mall. Mall will have to have a sort of experiential thought process, smell, taste, touch, feel, which you're not going to be able to do it through e-commerce. And that is where the transitioning of the malls will need to take place. So malls will need to evolve in India. Are they history? Perhaps in more advanced world where they were over-penetrated, part of the sort of badly run malls will become history. In India, not as much because we are very under-penetrated as far as retail real estate is concerned.
Very, very interesting insight around this. So over to you, Sangeet and Meenal, for closing remarks. And it was wonderful, having this discussion. Great insights.
You were wonderful, Harshal. You rotated it
beautifully. Thank you, Harshal.
I am going to ask all the panelists one question only. What is the good? You've got all gurus here, right? So we want some guru mantra. The success, what's behind your success and how you are so successful. Some tips for all our members here of IBG. So Anuj, Sanjay, Samir, and Saumyajit, if you could just share a few tips of success, it will be a great learning for all of us. Anuj.
I think for me, success, I would say I'm not the most intelligent guy, Sangeet. I think it has been hard work. For I think majority of us, I would just say is that unless you are selling cocaine and you're going to be able to make sort of quick money, I would say is on behalf of all of us, I would say is, it has been hard work. Yes, you've been able to separate out a little bit, whether it's technology, whether it's finance, whether it's data analytics, a new thought process. But I would say the ingredient remains, Sangeet, a lot of passion of hard work and doing it. And I mean, jab hum school mein hote the, Sangeet, in class, I remember, you would go out partying with a lot of friends from the school, and agle din exam hota tha, and you also wanted to be like sort of alpha male, and you also wanted to party with everyone. So घर पहुंचे 11 बजे, तो अभी तो थक गए तो सो जाते थे, अगले दिन एग्जाम होता था वहां पे, एंड अगले दिन सुबह पहुंचे तो ऑल द फ्रेंड्स, बॉस पढ़े ही नहीं, रात को हुआ ही नहीं. वो एक इंटेलिजेंट होता था उसके अंदर, वो रात को ना 11 बजे जाके वो पढ़ने लग जाता था वहां पे. वो बोलता था हाँ सो जाएंगे अभी जाके, बस खत्म हो जाएगा वहां पे. एंड दैट गाय यूज्ड टू रियली स्टैंड आउट. सो आई रिमेम्बर दैट इज के बहुत वो हार्ड वर्क करता था. फिर जब रिजल्ट आता था ना संगीत, सो अपना तो मतलब गए, कोई प्रॉब्लम नहीं थी अपना रिजल्ट देखने में. जब उसका रिजल्ट देखते थे ना, तभी लगता था यार ये बड़ा जबरदस्त इसका आ जाता है, हाउ कम ही इज एबल टू डू. वो बोलता था सर इंटेलिजेंट हूँ, गॉड गिफ्ट है. वो बाद में बहुत साल बाद पता लगा कि बॉस कोई इंटेलिजेंट नहीं है, वो पढ़ता था घर जाके वापस एट 11 PM. सो दैट इज व्हाट आई थिंक इज ऑल अबाउट लाइफ.
Sanjay, your 2 cents.
I believe no person is happy if your family is happy, whether it is at home or at office, right? I think you are not successful if your organization is not successful. If the colleagues that you're working with are not successful, what really happens, I mean, it used to be with me also. I think we used to think about success with us. What I've realized over 30 years, your success actually comes in the end. It is only when the organization and the people that are your colleagues and the family that they are happy, only then you can really call yourself successful. You cannot call yourself as a career successful, but everything else is falling apart and failing.
Very nice.
So I just believe if you single-mindedly work for the benefit and success of everybody, your success is almost given.
Fantastic. Very nice. Saumyajit, your take on it, sir. Your mantra of success.
I think it's quite early days, but for the last 20-21 years of working, one thing I'll be very honest is to stay humble and stay persistent. I think the moment ego gets in, that sometimes you get called an expert, sometimes you get called, a learned guru, and I think that is not true. I think I know 0.001% of elder care, to be honest. I think there is so much more to be learned. There is so much more to be done. There are 100 million elders in the country. So I think to stay humble and do what needs to be done, 18 hours a day, and always unlearning. I think sometimes we think we know, and then when we start reading, we say we understand how little I know. The last couple of years in healthcare, I've realized that my knowledge in healthcare is like really bad. And then the time in pandemic has taught me that I really need to know my basics in body parts and healthcare issues and so on. So this diversity of knowledge and all that is so much that I think if you stay humble, if you stay on the ground, and with the last mile on the nurses and attendants on the ground have taught me more about the ground than management consultants.
Very nice.
And same was in Antara, the people on the construction workers on the ground would teach me more about stuff than management gurus. So that has always worked with me for sure.
Very nice. Samir, your mantra of success.
So I'll talk about more about the future of to be successful in the future. So in my view, in addition to what everybody else has said, I think perseverance is non-negotiable, passion is non-negotiable, and most importantly, you have to constantly reinvent yourself now. in this lifetime, which is for the millennials, they will have to reinvent themselves 3 to 4 times in their life. They can't stick to one thing and pass on their entire career, because certain jobs are going to remain relevant, most jobs are going to be irrelevant, and you'll have to constantly reinvent yourself to newer things, and newer you'll have to acquire newer skill sets all the time, to be able to be relevant in today's environment.
Very nice, Samir. Thank you very much. Ajay Khan sir, I would request you to give the closing remarks for the session. Ajay Khan, over to you.
It's
You're on mute.
Okay.
Yeah. Okay.
Yeah, I just
Okay,
got
okay.
muted. Yeah. I think after this session, I will need at least half an hour to give my vote of thanks and closing remarks. It's been so wonderful. I want to tell the participants that they cannot get a better overview of the real estate situation other than what they got just now from industry stalwarts. And knowing them, some of them, Anuj, Puri and Mr. Jasuja. And I think there are so many questions which are yet to be unanswered, but we hope we can have the fortune of having further future sessions with you all, because we haven't got enough from you. It's been so good that we need more and more and more. So like Mr. Samir that said, he introduced the concept of obsession. So we are obsessed with the panelists now. So thank you so much, Mr. Sanjay Dutt, Mr. Anuj Puri, Mr. Saumyajit Roy, Mr. Samir Jasuja, and Dr. Harshul Savla. Thank you so much for coming here and taking your time, your busy schedule. Thanks, Sangeet Kumar, who's really de facto, although I am the chairman of the real estate vertical, but I think for all practical purposes, Sangeet Kumar is the chairman. So thank you, Sangeet, for organizing.
So much, sir.
Thank you, Meenal, Priya, and IBG team to keep the flow. May the flow be with you. And finally, thank you, participants, for your very active participation on the chat.
Very nice.
See you, everybody.
Tahir and Siddhi, now the last part, very important part of the session is certificate of appreciation for our lovely panelists.
Thank you.
Firstly, thank you everybody for a beautiful session and inspiring knowledge onto real estate for us and all of us IBG members. And I would like to have my honor in giving this token of appreciation to Mr. Sanjay Dutt. We thank you.
Thank you.
Mr. Saumyajit Roy, thank you very much.
Thank you so much.
For beautiful insight on especially the elderly part. Yes. And Mr. Samir Jasuja, thank you again. And Dr. Harshul, superbly moderating the overall session and questionnaires, and Mr. Anuj Puri, and beautiful insight on everything, I would say. Thank you so much.
Thank you.
Thank you all. Thank you, Sangeet.
Thank you very much.
Everybody.
It's a very enriching, enlightening session which we had. And thank you, everyone, the panelists, the IBG team, and all the attendees and the participants for a fantastic session. And like Ajay said, we'll be having a second session. I'm sure we'll again invite Sanjay, Anuj, Saumyajit, and Samir for some more insights. So it was a wonderful session, and we had a full house today. So again, thanks to everybody.
Yeah, one more thing. One more thing, sorry. Mr. Vikas Mitra said it's because of him that we're all together today.
Sure.
Special thanks to you.
Absolutely. Yeah, Anuj.
No, thank you. I was just saying, Ajay, after a long time, I've seen him. So I was just wishing him, that's all.
Thank you. Thank you very much.
Thank you. Thank you so
Thanks,
much.
Ajay. Thanks,
Thank
Sanjay.
you.
Thanks, Harshul. Thanks, Samir.
Thank you
So much.
Brilliant. Thank you, sir.
Bye.